Hey everyone, sometimes you see a stock that just takes off like a rocket. And today that's Regencell Bioscience.
RGC, right?
Exactly, RGC, surging over 100% in just one day. So if you're scratching your head wondering what's behind this sudden frenzy, stick with
Yeah,
us.
we're going to break it down.
We've done a deep dive into RGC, digging through research reports, market data, all that good stuff to help you understand what's going on. And believe me, you might just see this company in a whole new light by the end of this, especially when we tie it all back to a major global event that could change everything.
It's a fascinating case, that's for sure. Really shows you how unpredictable the biotech world can be.
Okay, so let's get to the chase. What exactly does Regencell Bioscience do?
In a nutshell, RGC is a Hong Kong-based biotech company, and their focus is developing treatments using traditional Chinese medicine, TCM.
TCM, okay.
Yeah, and they're focusing on some really tough conditions like ADHD and ASD.
Interesting. So using TCM for ADHD and ASD, that's pretty unique, isn't it? I mean, most pharmaceutical companies I hear about are all about developing those synthetic drugs.
You're absolutely right. Regencell is definitely going against the grain here. And it's not just any TCM remedies they're using. Their whole approach is built on this specific theory called the Sick-Key-O-TCM brain theory.
Sick-Key-O-TCM brain theory. Okay, now that sounds pretty complex. Can you unpack that a bit for me? What makes this theory so special?
Well, what's really interesting is this theory comes from just one practitioner, Sick-Key-O, who's got over 30 years of experience treating these conditions with TCM. It's a very holistic approach, all about restoring balance within the body to tackle the root causes of these neurological conditions.
So they're basing their whole company on the expertise of one person. That seems, I don't know, like a pretty bold move, don't you think? What if this approach doesn't really translate to, the rigor of Western medicine?
It's a big gamble, for sure, and that's one of the things that makes Regencell such a high-risk, high-reward kind of investment. It definitely raises questions about the scientific validation of their approach. Can they really convince the Western medical community that these TCM-based treatments are actually effective? That's a big unknown.
Yeah, that makes sense. So who's the brains behind this whole operation? Who's leading this ambitious venture?
All right, so the CEO of Regencell is Yat Oh. And here's where things get really interesting. His background is actually in investment banking, not pharmaceuticals.
Wait, an investment banker running a biotech company? That's not exactly the usual path, is it?
You got that right. But here's what's even more wild. He's only taking a $1 salary until the company hits a $1 billion market cap. Talk about commitment, right?
That's putting your money where your mouth is. But with a background in finance, does he really have the know-how to navigate the whole world of drug development? Can he actually bring these treatments to market?
Well, that's the million-dollar question, isn't it? While his financial skills are undeniable, that lack of experience in the pharmaceutical world, that could be a real hurdle. He's put together a management team with experience in finance, tech, and TCM, but they don't have a ton of experience with drug development or commercialization, so that could be a challenge.
Okay, so let's talk about the financial side of things. I understand Regencell isn't actually making any money yet, is that right?
That's right, they're still pre-revenue for their main products, which isn't unusual for a biotech company, especially one this focused on R&D. They're spending a lot of cash on clinical trials, research, all of that.
So how are their finances looking overall? Can they keep this up, while they wait for approvals and product launches?
Well, the good news is their debt-to-equity ratio is really low. So they're not super reliant on borrowed money. In fact, they actually have more cash on hand than debt, which is a good sign.
That's reassuring, I guess. But operating at a loss, especially with no revenue yet, that can't last forever, right?
Definitely not. Managing those expenses and getting more funding, that's going to be crucial for them to succeed. They've got to show some real progress with their clinical trials and get investors on board who believe in their long-term vision.
So we've got a company with a bold vision, a really passionate CEO, and a very unique approach to treatment. But they're facing some pretty big financial and operational challenges. This is where it gets really interesting.
You said it, a lot of potential, but a whole lot of unknowns too. And that kind of leads us to the next big question, like, what's the market thinking? What's driving this crazy stock surge today?
That's what I want to know. A 100% jump in a single day, it's practically unheard of, especially for a company that hasn't even, launched their main products yet.
Right. It's wild. And part of that volatility might come from, well, there's not a lot of institutional ownership. The big investment firms, they haven't really jumped on the Regencell train just yet.
So it's mainly individual investors behind this surge.
Seems like it. And you know what that means. Lots of speculation, maybe a bit of hype, and, maybe some emotional decisions being made.
Okay, that makes sense. But wait, didn't we say the CEO owns a huge chunk of the company? Wouldn't that be considered institutional ownership?
It's a little tricky. Technically, yeah, the CEO is a major shareholder, like a big one. He owns somewhere between 81 and 88% of the shares, actually.
Whoa, that's a massive amount. He's really gone all in on his own company.
Absolutely. And that much ownership gives him, well, a lot of control. Regencell is what's called a controlled company because of that.
Controlled company, huh? What does that actually mean? I'm not sure I get the implications.
Basically, it means the CEO can make a lot of decisions about the company's direction without needing, a board of directors or a bunch of shareholders to sign off on it. He pretty much calls the shots.
Interesting. I can see how that could be good and bad. Like, it might let them move faster, be more decisive, but wouldn't there be less oversight, less accountability?
Exactly. It's a double-edged sword for sure. Could be great if the CEO's making smart choices, doing what's best for the company, but it could also mean mismanagement, conflicts of interest if nobody's really checking those decisions.
That's a really important point. Investors need to know about this structure and what it means for the company's, overall governance.
Yeah.
So let's shift gears a bit. Let's talk about risks. We've touched on some already, but what are the biggest red flags investors should be aware of?
There's a few big ones. First off, Regencell still needs to get those regulatory approvals for their treatments. And that can be a long and unpredictable road, especially for a company going the TCM route.
Right.
Western regulators, they might need way more evidence, more clinical trials to be convinced these treatments are safe and effective.
Right. And even if they get approved, then they've got to convince doctors and patients to, actually use TCM treatments for conditions that are usually treated with conventional medicine. That's a whole other challenge.
You're right. There's still a lot of skepticism around TCM in the West. Regencell's got a tough battle ahead to gain real acceptance and market share.
And then there's the whole question of side effects. TCM formulas haven't gone through the same level of testing as Western medications, so there could be some unknown risks there.
Yeah, that's another valid point. TCM's got a long history, sure, but Regencell needs to do those rigorous clinical trials, make sure their treatments are safe, and work as intended in, a Western context.
So it sounds like investing in Regencell is a bit of a gamble. A lot of things need to go right for them to really hit it big, but if they do, the potential payoff could be huge.
That's a great way to put it. High risk, high reward. That's Regencell in a nutshell. They've got a lot to overcome, but if they prove their TCM approach works and they can handle the regulatory hurdles and the market challenges, they could be sitting on something really special.
Okay, so we've talked about the business, the management team, the financials, what the market's feeling, even the risks. It's clear that Regencell is, well, a pretty complex and fascinating company. But there's one thing we haven't really gotten into yet, that global event you mentioned at the beginning. How does that connect to all this?
Yes. That's where things get really interesting. Remember how we said Regencell's main focus was on ADHD and ASD?
Yeah, those are the main conditions they were targeting, right?
Right. But get this, they've also developed a potential treatment for COVID-19 using their TCM approach.
Hold on, a TCM treatment for COVID-19, that's unexpected.
It is, and it could be a total game changer for them. They've even set up a joint venture to offer this treatment in a few different countries.
Wow, that's a big deal. So they're not just going for those niche markets like ADHD and ASD. They're aiming for the huge global market for COVID treatments too.
Exactly. And while their ADHD and ASD treatments are still in those clinical trials, their COVID treatment has actually shown some promising results in early studies. That could be a big reason for the stock surge we're seeing.
Makes sense. Investors love companies with potential blockbuster treatments and a successful COVID treatment. Well, that could be it. So what does this all mean for the folks listening? Should they be running out to buy Regencell stock based on this?
Well, like we've been saying, Regencell is definitely a high-risk, high-reward play. There are still a lot of question marks around the company and its future. But if their TCM approach works, for any of their target conditions, it could be a goldmine.
It sounds like Regencell's a company worth keeping tabs on. Even if it's too early to say for sure, their unique approach and, their bold moves, they definitely make them stand out in the biotech world.
I'd agree with that. They're definitely one to watch. Their story's not over yet, and the next few years will be really telling. We'll see if they can really revolutionize the treatment of ADHD, autism, and maybe even COVID-19.
It really makes you think, a company rooted in TCM could be on the brink of a major breakthrough in the fight against COVID-19. It's like it challenges our whole idea of where innovation comes from.
Totally. And that's what makes this whole story so fascinating. Regencell is a perfect example of why we should always be open to new ideas, new ways of doing things, even if they seem a little out there.
Yeah, and I'm curious about like the cultural impact of all this. If a TCM-based treatment for COVID-19 actually takes off, gets widely accepted, could it help bridge that gap between Eastern and Western medicine?
That's a really interesting question. It definitely has the potential to, change perceptions and encourage more collaboration between those different medical traditions. Imagine a future where TCM and Western medicine work together, side by side to develop even better treatments.
That'd be amazing. It sounds like Regencell is a company worth watching, not just for, the potential profits, but for how it could change how we think about healthcare as a whole.
Couldn't agree more. Their story really shows the power of innovation, sticking with it, believing in those unconventional approaches.
Well, we've certainly covered a lot of ground today, from the ins and outs of TCM to the complexities of the biotech world, the whole 9 yards. What really stood out to you about Regencell? What do you think? Do they have what it takes to succeed? Let us know in the comments. We'd love to hear your thoughts.
And if you're interested in exploring more fascinating companies and investment opportunities, make sure to subscribe to the Stock Analytics AI YouTube channel. We're using some pretty cutting-edge AI to analyze market trends and uncover those hidden gems, all to help you make smarter investment decisions.
And as always, remember, the information in this deep dive is just for educational purposes. It's not investment advice. Investing always has risks, so make sure you do your own research, your own due diligence before making any investment decisions.
Thanks for joining us on the deep dive. See you next time.